Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, I hope you guys are doing well. Happy Monday to everyone. I'm really excited for this week. I really do love trading. Trading can be such an incredible thing for you guys. If you just start to really learn the laws or the foundations to what goes into becoming a good trader. And that foundational rules, and I didn't mean to start off with this conversation, but I'm going to go with it anyway. The foundational rules, guys, is like trading can be good for you and you can do well at trading. The only thing that stops you from you doing well is that you think that, you need to be in every single thing that moves, and you need to know, you need to be short silver right now and gold right now because you think it's going to pull back and right? All you really need to do is find a pattern in the market that you believe in, understand the win-loss ratio, trade it with good risk management, and then let it go. Meaning, take the trade, and every single, and out of 10 trades, two or three are going to be losers, the rest are going to be winners, and so on and so forth. Make sense? So if you're having a hard time, it's because you think you're trying to jump in every single thing that moves, and that's the thing that's actually causing you to go backwards. With that being said, guys, I'm going to do a bit of a market update for you today, guys, and I'm going to be looking at the market. I'm going to be looking at just the indices, plus also silver and gold, and just be looking at what's happening right now, what we could expect moving forward in the markets. But before I do that, guys, make sure you go down to mastertraderlab.com, because over the last 15 years of my trading career, I've learned some amazing system strategies and techniques, and I've put a lot of them actually in the Master Trader Lab. You can invest thousands of dollars in different trading courses, from chart reading, successful trader, trading systems, mindset, and so much more, right? But I put it in all in the Master Trader Lab, and I'm giving you a free trial. And if you'd like to stay a member, then you can lock in that discount price of only $6.99 per month. That's right, $7 a month. Get access to all this education. And if you're not even happy, let me know within your free trial and you'll never be billed. So all the risk is on my shoulders. So go to mastertraderlab.com right now. There you go. There's my plug. So I can go buy my cup of coffee right now. Guys, I really set that Master Trader lab up just to really give you guys that are looking for a bit of a head start. That's what that lab is all for. Anyway, so let's have a look at what's actually going on right now on the Dow Jones. Okay, so on the Dow Jones, what's happening right now? On the short term, all right, this is just for the very short term, okay? We've had a nice move up and a nice move down. See this volume spike here? That volume spike doesn't mean anything. That was options expiration. So there's just a lot of options expirations expiring. Makes sense? So we have that there, right? Market move down and the market moves up. And then we're having a bit of a pullback through here. But let me ask you a question right now, okay? And this is really important to understand how these markets work, and putting the odds on our side. Right now, what do we see, right? We see this move up, and now we're seeing this sort of weak move going sideways, right? We see this move up and weak move going sideways. So we can see that the trend in this on the Dow Jones is where we got a move up, and now we have a weak move down. So if we had a look at these last two, this buying leg and the selling leg here, who's more in control right now? The buyers, right? Because the buyers, even though it wasn't a very strong dominant move up, if you're comparing this selling leg, the selling coming down, and this buying leg, the buying going up, which one is more dominant? Which one? It's what? It's the buyers, right? So here is the thing here. Right now, as we speak, okay, because tomorrow, yes, can be a different story because we're reading the daily chart. But right now, as we speak, we can see that there. Now, also, where is the moving average pointing? It's pointing where? It's actually going up, right? So what is that telling you? That momentum is now going up. So if we have a look at those two different scenarios right now in the Dow Jones, okay, which pretty much applies to a lot of the other indices, but just use this analysis on other indices. Market goes up. So we had a low short month, and now we have a pullback, and now we're having momentum. So we're having trend. So the trend is starting to pick back up, and we're having momentum, which is the moving average. It's a gauge of momentum is starting to pick back up as well too. If you want to know what this moving average is, it's a 20. The number of the moving average is irrelevant, guys. You could use a 21, 25, 28, 24, doesn't matter, right? All I'm using it to see where is the gauge of momentum, right? So I like to use a couple of different moving averages. One is a 52, which is more of a longer term moving average. See what the overall long term moving average, and then a bit more of a shorter term is the 20. And then I will also throw a 9 on there if I'm looking to scale out of a trade, or no, if I'm looking to maximize my profits, I'll use a 9 moving average. But that's the moving average I use, right? The number is irrelevant. What I'm using it for is to gauge what? Momentum, right? A bit more of a longer term momentum. The 20 is more of a shorter term momentum. I'm just trying to see where's momentum, right? Because guess what? Well, let me ask you a question. If you're going to take a trade and you've got strong momentum, i.e. a good strong moving average in your direction, is that going to increase your probability of having a successful trade? Damn straight it is, right? Damn straight it is. That's actually why it's part of my my system that I trade. Or if you'd like to learn my number one trading system that I trade every single day, that gets me over 90% success rate, and I do really mean that, over 90% success rate when these trades do appear in the markets, then there should be a link in the description. Go join my next web class and you can learn all about that. So that's what we're seeing right now. So in the nutshell of what we're seeing through here, right, we're seeing a big move up and a sideways move and a very weak sideways. So I wouldn't be too surprised to see that if we do maybe just continue here for a little bit sideways more, and then suddenly we start to pick back up and we start to break up, and then we're going to go for another nice run. Because what is this developing through here right now? It's developing what? A bull flag, right? Bull flag, trend momentum. We've got a nice move up. We're building a little resting phase through here. So this could be getting ready. This looks like it's getting ready to have a nice move. And if we continue to develop where my fictitious blue bars are right now, then we could be getting ready for a move to the upside. Now, guys, what I'm looking at here right now, it's so important that you analyze the market for what the market is telling you. If you're a trader of the markets, meaning you're getting in and getting out on an active basis, then that's what this analysis is for. This has nothing to do with what's likely to happen next month. Who knows? Who cares? Teddy bears, right? It's like, it's like analyze the market, because what is the only truth in the markets? The market itself, right? It's the market itself. That's the only truth. Because people say, whatever, John, that's a whole bunch of bollocks. No, there is no truth in the markets. It's all manipulated. It's all rigged and blah, blah, blah. Okay. All right. If you're going to suck your dummy, if you're going to suck on your dummy and you're going to have your bot and, and all that sort of stuff, then guess what? Don't trade the markets if you don't like what's actually going on in these markets right now. Right? Yes, there's manipulation. Yes, there's this. Yes, there's that. But guess what? That's a poor fucking excuse of why you can't do well in the markets, because you don't even have one simple plan that you personally continually follow every single day. Right? That's what that whole market's manipulated. The market got me, blah, blah, blah. All that kind of crap is just a bullshit excuse of why you are not doing well in the markets. And the reason why you are not doing well in the markets, and if you are, fantastic. But if you're not, I guarantee it's because you are not consistently sticking to one type of setup. You think, oh, I'm going to go short here. I'm going to go long here. Right? So, and I'm bringing it up right now, guys, is because so many people say, oh, blah, blah, blah. The market's rigged, blah, blah, blah. It's like, okay, well, if you don't like what the market is doing right now, leave. But if you want to be part of this world called trading, and we want to, the most important thing we need to do is listen to what the market is telling us, the chart. Forget the indicators, forget everything else, right? We can start to apply other things such as the moving averages and stuff like that, right? To increase our probability, but that's how you truly move forward in the markets. So, that's what we're seeing there right now. A little tangent there, but let's go have a look at silver and gold here. All right. So this is, what is this? Is this silver? Yeah, it is. It's silver. So we're looking at silver right now, and we can see that the silver had a nice little high, low, high, low, high, low. Market ran up, came back down. Notice how we're just still struggling around this level through here. So this is really interesting to see what's going on with silver right now. We're just still struggling through here. Well, we're not really struggling. We've actually been going up for quite some time. So now we've just gone through a bit of resting phase. It'll be really interesting to see if we do get a bit of a rollover from here. It's probably likely to be short-lived. So for you guys that are thinking, oh, I'm going to go short silver, why would you want to short silver? Seriously, why would you want to do? You know what? Do whatever you want to do, but it's nuts. If we've got a nice, good bull market right now, and the bull market has started to develop right now, why would you want to try and? Some people's like, I'm going to try and short silver right now. Come on, guys, seriously. Go with momentum. Go with the trend, right? So if we start to break back above this resistance line through here, the 1850. And then that's probably likely to start to see a lot more movement to the upside. But we're starting to see a really nice. Let's bring this back with DD. There we go. All right, cool. All right, so we're seeing that through there. All right. So there we go. All right, so let's go have a look at gold right now. So this is gold. So what's happening with gold right now? Pretty much a head and shoulder formation, but this head and shoulder formation would not be a reversal pattern, guys, because we've just started a bull market out of this here. So this is probably likely to be some sort of a continuation pattern in the big scheme of things. Yes, we are forming a shoulder, head. This could be some sort of shoulder here, but I don't believe it's likely to be a head and shoulder formation, or it's likely to be one of those head and shoulder formations where you see it's actually it's a topping pattern, and then we start to see this. If we do start to see that, if we do start to see a breakdown, it's probably likely to be short-lived, right? Short-lived to the downside, and then the buyers are probably going to come back in. This is probably some sort of false breakout. It's probably going to rally back up and then continue back up to new highs. So either guys, it's either going to pause here and not break down past support, or it's probably and run up, or it's probably likely to break down. If that does happen, there's a very high probability chance it's likely to be some sort of a false breakout, and then we start to move to the upside. Make sense? So, and again, guys, this is just going through a bit of resting phase. So yeah, let's go and have a look at so that's the GOD, that's the SLV, SILJ. What's going on through here? All right, so we had a higher low, a higher low. We're still getting some sort of higher low through here right now, but we're getting a lot of weakness where we are right now. So pretty much just overall sideways, flattening out. There's no true strong trend where we are. Buyers are still slightly in control, but nothing really much going on there on the short term. Same for the SIL. This is SIL here. We're seeing that we had a nice high low, high low. This could be still some sort of high low through here right now, but we do know this whole area, this band up here, is some sort of major area of resistance in the markets. So that's something to keep an eye out for as we continue along. Now, moving on through to the JNUG. What's the JNUG doing? The JNUG is actually really, really interesting. Look at this here, right? Remember I was talking about before about looking at the trend and then looking at the momentum, right? Trend is what the market is telling us, high lows, higher highs. Momentum is more like what the moving average is telling us, right? We had a low, high low, high low. What's this here? This is a lower low, double top. So I would not be too surprised, which is really interesting. I would not be too surprised if we actually created some sort of lower high here. Maybe. And then we started to continue now. Like for you gold bugs that, it's not going to happen. Like, guys, one of the most important things, I'm going tangent today. Happy Monday motivation for you guys. Right? Guys, if you want to be part of this market, one of the most important things to do is to have a non-biased view on anything, really. Right, a non-biased view. The reason why I'm saying that doesn't mean you're not going to have, okay, this is a really good setup, I'm going to take it. What I'm saying there is that always be prepared that your view could be wrong in an instant, right? And we've seen that so many times. You need to say, I'm getting into this with a good risk management. So we could be creating some sort of lower high here, and we're starting to get the momentum starting to kick down as well too. So that's the resistance level there right now. So it'd be really interesting to see whether we do create some sort of lower high here on the JNUG. NGUT, same sort of thing, lower low. This could be some sort of lower high here. So we may be getting a little roll over, and then it may be a drop back down. That's oil. This is USO. I wouldn't really worry about that there. Again, this is oil through here. Oil is probably going to come down and fill its gap through here. Again, just really, really, really not much going on there with oil. Let's go have a look at the GDXJ. Same thing with the GDXJ as obviously the JNUG. It's lower low. So this could be some sort of lower high through here right now. But on the scheme of things, guys, that big picture there, even if we did get a lower high, then we probably see even just a move back down towards this 34 level, which is this long-term support level. And if that happens, we're probably likely to find a bit of support. So even if we did create a lower high, it's probably going to be very short-lived, maybe even down to 34 if we do get that lower high, moving down through there. And then the GDX, same sort of thing as well too. We look at the GDX. We can see that there's major resistance lines. So that's the major resistance lines through there. So we go back to the daily chart. Once again, as you can see here, we're getting some sort of lower low. If we create some sort of lower high, it's probably going to come down. We're probably likely to get a very short-lived move back down towards that 25 level go there, guys. And then if that happens, that's just that in this weekly chart here. That's just part of this nice healthy pullback we're getting in the overall big picture. So let's see a lower high here right now and a small short-term pullback. It may not even get down to the 25 level. It might be just a much shorter pullback. And then the buyers are probably likely to come back in and see a nice move again from the buying perspective. But we may see another couple of weeks to the downside like it's been doing right now. And if you look at this overall in the GDX, right, we've pretty much been doing nothing for pretty much close to 2 months now. Pretty much just nothing going on. We get a little movement up through here, but overall nothing going on through there. So this lower low, we could be seeing some sort of lower high here right now. If we do, we're probably likely to see some sort of a short-term pullback in the markets there. So I hope you can see what I'm saying here, guys, that you know, I know I went on a little bit of a tangent today, guys, about some things, but you know, I want you to do so well out of the markets. And it's not that it's not that the top percent of people who do well out of the markets are lucky or they have some insider secrets or anything like that. No, it's nothing like that. And you know, and it's like, if you want to do well out of the markets, you must you've got to, if you start to look at people that do well out of the markets, what do they have? They have a plan, right? They have a plan that they're looking to get into. Because if you have a pattern on the chart that you like to trade and you believe in it, then guess what? Then that's what you should only stick to. Your problem is that you want to get in every single thing that moves because you think you're going to miss out or you think you're going to make a fortune. So you load up, D, right? And then bam, that's you blowing up your account. Because I have the t-shirt for that. The best times that I trade is like the worst thing that these markets have done for people and even for myself in the past is allow you to be very active in these markets. I mean, get in and get out really quickly. That's probably the worst thing that you can do as a trader. Right now, when I'm talking about a trader, I'm talking about people that can actively get in and start to just trade anything and everything. Oh, looks like the market's topping out. I'm going to go short here. It's like, well, did you just do that based on a thought or did you just based on a plan? Now, guys, yes, I still probably 2 or 3% of my trades are based on what I think or what I hope. I understand that. 98% of my trades, 97% of them are based on a simple proven plan that I look for. And then I just go with that. Makes sense? So you can do so well out of these markets and you really can. And if you want to be you've got 2 choices when become part of this world called trading. You can just trade based on what you think is a good idea, what looks like a good idea, or hope is a good idea, or fearful of missing out. You can trade based on that and then never get ahead in the markets because you may be lucky every now and then, but long term you're going to get smacked. Or secondly, you can say, you know what? Long term, I want to do well out of these markets. What do I need to do? And all you need to do is throw all this other garbage out about the market's rigged and all that sort of stuff, and then focus on you. Focus on, okay, are you being consistent at trading one pattern in the markets that you truly believe in? If not, you are going to continue to get smacked. So if you want to do if you want to do well out of these markets, then that's what you need to do. Now, what is that pattern? You know, join my web class with the link below or join the Master Trader Lab. You'll find a few patterns, right? The pattern itself or the system itself is only 5% of your success. It's not the system that gets you. It's you that gets you, right? I speak to so many people on the phone who want to join my coaching program and they're like, I tried this trading system and you know, it didn't work for me. I'm like, okay, tell me, you had a trading system. Out of your last 20 trades, what percentage of trades that you actually took met that actual trading plan? Maybe 50%. Oh, okay, so you're still taking 50% of trades based on what you think, hope, or fear. Oh, John, but you know, some of the trades that I did take with that trading system, that you know, they were losing trades. I'm like, yes, so and that's part of trading. Stop thinking that because your trading system had a losing trade or 1 or 2 losing trades that it doesn't work. No, that's just part of trading. The most successful traders on the planet are not going to be right all the time. Paul Tudor Jones, one of the top 10 financial traders, not investors like a Ray Dalio. Ray Dalio is a bit more of like a trader long-term thing, but a trader, right? The most successful long-term trader on the planet. He knows that the way that he trades, that, you know, he's not going to be right all the time. He protects himself. He doesn't let those losses get to you. It's like, okay, you must accept the fact that that's going to happen. Just accept it. It's like, you know what? I'm getting into the trade right now and it can be a losing trade. If it is a losing trade, am I protecting myself? That's how you truly get ahead in the markets. Because too many people are trying to make all this money on one trade and it's like, oh my goodness. And then it's a losing trade. It's like, oh my goodness, I can't believe I lost all that money. Make sense? And then from that process, you can pick up, and you keep going, you keep going. And then from that process, right? From that process, you can start to really move forward in the markets. Guys, I'm not talking down at you. I'm talking with you here right now, because this is the shit that I've had to deal with. And like, you know, I'm going gray right now at such a beautiful young age of my, of my life. Because I realized I said to myself, okay, I fucking need to get real with myself right now. This is what I said to myself many years ago. If I am serious about truly doing well out of this thing called trading, or this world called trading, and I want to be part of it, then I need to get my shit together and actually start to do the things that I need to do well out of these markets. And one of those was stop taking things that just because I thought it was a good idea. No, that's not the thing. It's like when you start to look at these trades, like it's a methodical approach. Like, no, does it meet these certain rules? Yes or no? Like with me, I have four rules. Again, with that web class link below, you'll be able to see my 4 rules. I have 4 simple rules that I follow, that if it meets these rules, then it's a really high quality trade. So, you know, and I'm saying, okay, if I seriously want to get ahead of these markets, what are the things that I'm doing that's stopping me from moving forward? And I need to stop doing those things. What I need to start doing to continue moving forward. And it really come down to a simple fact that I wasn't focused on just one really good pattern or really good setup, that I became so good at it, became a master at it. And secondly, that I was just based on hope or fear or think or, you know, all this sort of stuff. And I'm just like, man, and I spent years just losing money, or making a little bit of money, then losing it, and making a little bit of money, then losing it. And I spent all that time, and I said to myself, I have to get so fucking real with myself. Like, John, wake up. That's what I had to say to myself. John, wake up. Seriously. You are spinning your wheels here right now. You either get real with yourself and start to apply those things that's going to help you get ahead in the markets, like not over trading, like being consistent every day, like discipline, like patience, you know, and yes, give yourself a break. You're gonna screw up every now and then. You're gonna take a trade that you shouldn't. That's okay. But it's time for you to get real. If you want to get real in these markets and you want to start to do well, this is what you need to start doing. Now, as I said before, guys, probably 5, maybe 10% of the time, I screw up myself, right? Which means I take a trade every now and then, which, you know, didn't meet all the rules. And guess what? You can guarantee what happened, right? Bit of a smack-a-whacker for me. Now, thank God for my risk management. I get back on track for the very next trade. But do you see what I'm saying there, right? It's like, I want you to do well. And if you've been trading the markets for a few years or more and you're not doing well, then you need to say to yourself, it's time for me to get real about these markets. And not look at these markets as a get-rich-quick scheme. Not look at these markets like piling all your money on one single trade and then think you're going to become a millionaire overnight, because that's not how long-term success is done. Long-term successful trading is getting into a trade right now, protecting yourself if it is a losing trade, and replicating that again and again. And most of those trades are going to generate a profit. That's how you make money consistently long-term. Not just now, but for the rest of your life. And as you build that solid foundation of what I just said there, then you start to go from a $100 trade to a $500 trade to a $5,000 trade to a $10,000 trade to a $20, $30, $40. That's what I've done, and continue, right? $50,000 per trade, and you continue go. And before you know it, you don't need too many good trades throughout the entire year from that one system that you're trading. As you've built your confidence in your bank account over many years of building that solid foundation of sticking to that one plan, having good risk management, knowing that some of the trades are going to be losers, most of the trades are going to be profits, and your job is to continue to take that. So when there is a losing trade, you're not getting hurt too much, and then long term overall you start to build the confidence to go from a $500 trade to 1,000 to 10 to 20,000 and so on and so forth, and then you start to pick it up. Before you know it, you're a multiple 6-figure trader, and even potentially within 4 or 5 years of doing that, a 7-figure trader. That's the path. Okay, that is the path for you to truly move forward in the markets. So if you've been trading the markets for a while right now, and if you are struggling in the markets right now and you're still doing the same shit, expecting a different result, take that hammer and hit it over your head and say, listen here, it's time to get real. And you need to start applying these long-term principles, because you trying to make that short-term money is actually pushing your long-term goals. I can guarantee you guys, take a trader take 2 different types of traders. Trader A, right? Trader A has a $10,000 trading account, and Trader B has a $10,000 trading account. Trader A is, he said, I'm just going to, every single trade I take, I'm going to risk more. So I'm going to risk $200 on my account, but I'm going to have the potential to generate $200, $400, $600 per trade. That's actually a profitable trade, right? If it is a losing trade, I'm risking $200 out of a $10,000 trading account. And if it is a winner, then I'm going to be making, $400, $600, right? Now, let's get real here, right? There's emotions built into this. How does that actually become reality? So, win-loss ratio, you lose this much and you make this much and then you're a profitable trader. But when it comes down to tin tax, how do you actually make that happen? How do you actually make that happen where if you are risking $200, you actually lose that $200, and if you are starting to generate a profit, how do you actually generate the $200 or $400 or 200, 300, 400% return, maybe trading even options? How do you actually do that, right? How do you actually let your profits run and not be fearful of actually losing the profit? This is the emotional part of it, right? That whole win-loss ratio, It's like, yeah, but what about the emotional side of it? The reason why I'm bringing that up because a trader A is not likely to be as emotional. Therefore, he's likely to let his profits run. And before you know it, he's picking up a good, on his winning trades, he's picking up a good between 2 and say 4 and 5 and 6% return growth on his account, per successful trade. Sometimes even more. I've had a few trades that have gone 1,000% or more over, say, a 3 or 4 week period. If you're doing that, guess what? If you're risking 2% of your account and then you do 1,000%, you do the numbers. Your account's up 20%. Oh my goodness. But John, that's not a lot of money. That's only $2,000. Well, that's what you need to do. But then take the emotional side of it, right? Then take trader B. What does trader B do? He's like, I'm going to try to make a lot of money. And he tries to put all that, he puts $5,000, half of his trading account on, guess what? The next trade, that's a losing trade. The other trader lost $200. This guy, he lost $2,000. Oh my goodness. The next trade, they both take it again with $5,000. Guess what? The other trader, he takes it with $5,000. Trader B takes it with $5,000, trading way too much. The other trader says, no, I'm just risking another $200 on the account. That's okay. My account's down 2%, maybe 2.5%, including brokerage. I'm now, guess what? Trader A is now going to just risk $200. Trader B is going to risk his $5,000. And when Trader B risks his $5,000 again, guess what? It doesn't do much for a few days. Then it runs on for a small short-term profit. He quickly takes the $1,000 because he's afraid of losing money. His account is still down now. What? 10%. Right, because he did lose $2,000 the first trade. Now he quickly took that very first $1,000 because he's afraid of losing the money, or even worse, afraid of actually losing the profit, then turning into a loss. So he can't. Well, I can't take it. And guess what? Guess what? And now he takes that $1,000. Oh, look cool. Cool. I got $1,000 out of that. That's okay. I know my account's still down 10%. I started with 10,000. Now I'm still left. Now I'm at 9,000. I know that, but that's okay. Where trader A, guess what? He's risking his $200, and this trade now on this one here was a 300% return, right? So he didn't generate a $200 profit, right? He generated $600 profit. He lost $200, right, on his very first trade. That's what he lost. But then he generated a $600 profit. Guess what? His account is now up 4%. Do you see what I'm saying there? So if you're one of these traders who thinking that, yes, I'm going to make a lot of money on one single trade, and you're wondering why it's going wrong, is because your emotional balance is out of balance. And you need to be emotionally strong and comfortable with the risk in the markets to be able to, and then guess what? Now, if you got a $10,000 trading account and now your account's up 4%, guess what? Before you know it, I start to apply those exact same rules and you continue to do that week after week, year after year. Before you know it, a year or two from now, you got a $100,000 trading account there, or maybe you build the confidence to put more money in the account. And before you know it, instead of it just being a $400 growth over the space of say a couple of weeks, now it's a $4,000 growth. Imagine if it was a $200,000 trading account, risking the exact same amount. Before you know it, that's an $8,000 profit. Do you see what I'm saying there? By still taking the small risk. That's how you hear these stories, and I've seen it from 2 of my 7-figure mentors go from a $5,000 or $10,000 trading account and they completely just blow that up in a good way to becoming to doing 7 figures with that exact same trading account 4, 5, 6 years later. Is because of that foundational process there. So there we go, guys. That is your Monday motivation for you guys. If you want to do well at these markets, you can do well, but you've got to be real with yourself and you've got to be honest with yourself. Because as you can see, that 5% of what I talked about here has got to do with the system, and everything else is the psychology of the mindset, which is your consistency, your discipline, your patience, and your risk management, the way you're looking at this, the way you look. Are you trying to make money really quickly, or is it an overall thing that's got to continue there? And I promise you, if you slow down and not try to force things, you'll get to your goal a lot quicker.